The reason why you're probably struggling to learn the information in your pre-licensing course is because pre-licensing courses just kind of give you a bunch of facts and hope that you remember it. We're going to go through a couple of ways to make sure that you understand the concept in easy to remember ways. So we're going to go over whole life today. So whole life is a permanent policy. And if you have a notebook, I would definitely recommend writing this out. Permanent policy. But it's not really actually permanent, it's permanent. And so if you get any questions on whole life, they will want you to say, hey, it's a permanent policy. However, whole life kind of has a hole in it. And the reason why is because whole life is going to do something called it's going to endow at age 100. So whole life has a hole in it because at age 100, it's going to endow. And an easy way to remember this is obviously we're drawing this out, so it's going to help stick in your brain. Whole life has a hole in it at age 100 and endows. And if a woman has some large assets, she is called well endowed. And so you have your two zeros here. You can use your imagination, but obviously that's an easy way to remember. Whole life has a hole in it. It's permanent insurance, but it has a hole in it. And it's going to endow at age 100. Now, what does endow actually mean? So this is going to be an ordinary whole life policy. The death benefit is up here. So let's say our death benefit is $100,000. The death benefit is always going to stay the same throughout the life of the policy. It's going to be level. It's going to stay the same. Now, when you decide to go, hey, we're going to go get a whole life policy, what the insurance companies do is you go through underwriting. They determine, hey, how risky is it for us to insure you? How likely are you going to die? And so what they do is they figure out, okay, maybe you're 40 years old right now, and by the time you reach 100, the amount of money that you put in, plus our little bit of interest, usually it's 1 to 3% of interest that they're paying, like a savings account. We don't recommend whole life policies for most people. There's so many better things out there. They just need you to know this information for the exam. Most of the stuff you're going to learn hasn't been used for ages. I got licensed over 10 years ago. It's the same information. However, policies have absolutely changed for the better for clients. So this is literally just to know the information to be able to pass an exam. You don't need to learn this information for forever. So for a whole life policy, they determine, okay, someone's 40 right now. That means that they have X amount of time between 40 and age 100. So we've got 60 years between now and age 100. Based on their health, based on their gender, based on their current age, what is the likelihood of them passing away? Okay, this is the amount of premium every single month. Premium is the dollar amount, either monthly, annually, how you're going to be paying for the policy. Let's say that they determine it's going to be $200 a month from age 40 to age 100. For ultimately how they're deducting it, how they're figuring this out is they say, okay, we're going to give them 1 to 3% interest on that $200 a month. And what we're going to do is we're going to give them that 1 to 3% interest. By the time they reach age 100, we need the account to equal $100,000. That's ultimately how they're determining how much money needs to be put in. So they're obviously going to be taking out the cost of insurance. And so a portion of that money is going to pay for the insurance, and a portion of that money is going towards the cash value. This line here represents the cash value. So you may be putting in $200 a month for a while, but your cash might not start growing until years 2 or 3. And what it's doing is you're paying for the premium for the cost of insurance, and then you're also paying towards the cash value. That money inside of here that's growing, it's getting bigger and bigger over time. You can take a policy loan from that. So there's cash value inside of a whole life policy, and you can take a loan. You could say, hey, there's 20 grand in there right now. 20 grand, I want to pull out 10 grand of it to buy a car, or I want to borrow some of it. They say no problem. You can take a loan on that money. Not a problem at all. So that cash, it's utilized kind of like a savings account where you can take a policy loan from it. When you decide that, hey, if something happens and you pass away, you're going to get that $100,000 minus any loans that you take from the policy. So if you took out 10 grand, they're going to take $100,000 minus the 10,000, and they're going to give your beneficiary $90,000. So you can take loans from the policy. The insurance company will be made whole in case you do take a loan. But as you grow that money, they're going to say, hey, you're essentially, they figure out, hey, your monthly premium is going to stay the same. It's going to be that $200. Your cash value is growing throughout that time. This right here, all of this is going to be the death benefit that you're actually paying for. And so the death benefit is obviously going to shrink over time because your cash value is growing. And ultimately, the goal of a whole life policy is the cash value needs to equal this 100, the death benefit, whatever that is, that $100,000 by age 100. And it's a permanent policy, but it has a hole in it because it endows at age 100, which means that at age 100, if you're still living, they're going to pay out that $100,000 to you because you're still alive. Back in the day when these were first created, they said people weren't living to age 100. And so this was totally fine. Nobody was living to 100. Nowadays, with medical advancements, absolutely people are living past 100. And so if that were to happen, if your policy were to endow, they say, hey, you put in, let's say, $70,000 for your premiums each month over, the course from age 40 to age 100, your account grew to 100,000. So you actually have $30,000 that you didn't put in yourself. Since it endows, you are always charged tax on any of the interest. So if you go to pull out money above what you actually put in yourself, if you're going to withdraw it, you absolutely have to pay tax on the interest. That will always be a question. Anytime they ask what percentage or what part of your policy are you going to be taxed on, it's the interest. And so the interest, so if your policy endows, that means you put in 70,000, it grew an extra 30,000, so you are going to have to pay taxes on that 30,000. You get this tax free. But if you pass away at any point between now and age 100, your beneficiary receives all of that 100,000 completely tax free. So no taxes for the beneficiary. So that is whole life in a nutshell. Biggest thing to remember is that it's a permanent policy. It has a hole in it because it endows at age 100. Remember our drawing up here. It has a hole in it. It endows at age 100. That means it pays out at age 100. It endows, it's going to pay out. If it pays out, you are going to be charged taxes on the interest. Now, this is going to be a paid up or limited, paid up or limited pay. It works exactly the same way. However, instead of paying from age 40 all the way to age 100, where you're paying every single month to age 100, we're saying we're going to limit the payments. And so we're going to figure out, okay, instead of paying $200 a month from now until age 100, let's say you're still 40, this is still 100, it's still a $100,000 death benefit. Now it's going to be 400 a month instead of 200 a month because you want to be done paying by, let's say, 65. You want to stop making payments. You don't want to pay any more into it. And so your premium is going to go up. It's going to work exactly the same though. There's cash value inside of here. The money is growing as time goes on. The death benefit is always going to be that 100,000. You can take a loan out of policy. There's cash value in there, but you're just going to stop making payments early. Stop paying before age 100. So you don't have to pay. So limited pay whole life is you're going to pay for a limited time. Usually a lot of these terms you can flip-flop. Pay for a limited time, it's called a limited pay whole life. If you flip the words, pay for limited, you're going to pay for a limited amount of time. And then the last one is going to be single premium. Single premium. This is pretty self-explanatory. Single means one. Premium is amount of money going into the policy. You are making one payment, which is also known as a lump sum, usually when you have an amount of money that goes into something. So lump sum. So let's say this was $15,000 that you put in one time. The way the policies are structured, they want to make sure that somebody isn't money laundering. So usually you don't have access to all of that cash value all up front, but over time it's going to continue to grow and it's going to just utilize that 1 to 3% interest rate of calculating how much premium that somebody needs to put in if they only want one premium. And again, if it was that 40 through age 100, it's that same $100 death benefit. These aren't actual numbers. I'm just giving illustrations here. But they're going to determine based on somebody's age. So based on somebody's age, their gender, and their health. So if somebody has had a lot of health history problems, if they're more likely to die, it's going to be more expensive. If someone is really healthy, they're not likely to die, it's going to be much cheaper. And so this is whole life in a nutshell. But what I really want to show you is that a lot of times pre-licensing courses, they don't actually show you the tools that you need to be able to succeed, unfortunately. And so what's really cool is each state provides something called an exam content outline, which goes through all of the main topics that are going to be on your exam. And so we can see we just went through whole life products. We went through ordinary whole life, limited pay, and single premium. This is part of your exam content outline, which goes through all of the topics that could be on your exam. And so as long as you understand how these concepts work, you're going to be able to answer any question that they throw at you on the actual exam. These are different for each state. If you go to the link down below, you'll be able to get a page like this. You'll be able to find your state. You can see there's a candidate handbook or a candidate bulletin that for your state it goes through, hey, here's the testing center, here's what to expect, here's what to do, all of the steps. There's your exam content outline if you're just taking your life exam, the exam content outline if you're taking your health exam, and then if you can take your exam together for life and health for your state, and then that exam content outline with combining life and health. Sometimes it's in the same PDF. So this one, we've got your life one. We've got the state section there for the life. We've got the health section, and then we've got the health section for the state section for the health exam. So this is super helpful. If you don't have yours for your exam, definitely download it. It's completely free. You'll get access to yours and be able to utilize this as a great tool of figuring out what are the things that I need to know, because it's going to tell you, hey, under types of policies inside of your exam, there's going to be 15 questions. It can vary, those 15 questions can vary on any of these topics. And so as long as you understand those concepts, you're going to be able to answer any question that they throw at you on the actual exam. So we just went through these two here of ordinary whole life and limited pay and single premium. I'll have some other videos on some of the other ones of these. If you want my entire course where we go through all of the main topics that are going to be on the life insurance exam, there's the Exam Mastery Bootcamp, which I'll also link below. Extremely helpful where we go through real life examples like this so you can see and understand it and be able to remember things a lot easier than just reading a bunch of facts or sitting through a bunch of lectures. So I hope this helped. Definitely grab your exam content outline down below. It is so helpful with knowing exactly what you need to focus on for your state. Some of them look like this. Some of them look a little different. Alabama's, it looks a little different, but you can kind of figure it out of, okay, if I'm taking the life and health exam, there's going to be 8 questions on these topics, life, health, and it goes down and shows you exactly what you need to focus on. Some states are nicer than others. I think Kentucky's really sucks. I'm sorry. California's isn't super great either, but these can at least give you a breakdown of what to expect on your exam and what you really need to make sure that you know so that you know you're focusing on the right things instead of trying to read through and remember everything. Oh, hey, I just need to understand this concept, how this works. Okay, we went through my whole life and limited pay. That didn't take us that long. And so getting through these is going to be pretty quick and easy. And so definitely check out my other videos to see more of these different sections. I'll show you exactly in the exam content outline where those are. And then utilizing your exam content outline is going to be extremely helpful. And if you want even more help like this, where we also include games, we include extra resources, flashcards, all of that fun stuff. We go through a practice exam together for each of the main sections. So we go through those practice quizzes. That's all found inside of my Exam Mastery Bootcamp. I wanted to make this as easy to learn as possible because I know how frustrating it is when you're learning all this information and it's a lot of new information and it's difficult to get through and you're trying to remember everything and it's not sticking and it's becoming really frustrating. I don't want you to spend forever on this. Literally, let's get through it fast. Let's get it all into the forefront of your brain, spit it out on the exam, and be done with it. Because as long as you keep up with your license, you will never have to take this exam again. So best of luck. Check out my other videos if you need some more help. Definitely grab your exam content outline. That is completely free. Grab it. It is going to be so helpful. Thanks so much and talk soon.